Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everybody, Ben Rains here for top stock picks of the week at Zacks. Today I'm looking at MYR Group, which trades on the ticker MYRG. It is one of the largest specialty electrical construction contractors in the US and one of the best pure play stocks to buy in the space. It's benefiting from a once-in-a-generation energy boom that's just starting to help run the power-hungry AI arms race in a thriving growth economy. The Colorado-based company has already doubled its revenue between 2018 and 2022. It's projected to post strong sales growth again going forward and triple-digit earnings expansion in 2025 alone. Its upbeat earnings outlook earns the AI-boosted infrastructure stock a Zacks ranked number one strong buy at the moment. In its simple bull case, is it's one of the go-to electrical construction contractors for critical projects such as grid hardening and expansion, nuclear energy and renewables integration, electrification, and the explosion of power-hungry AI data centers. Now let's dive into more about the company via Zacks.com and our ZRS system. Okay, so now we are on the ticker page for MYRG on Zacks.com. We can see here that it's a Zacks ranked number one strong buy. It also has an A style scores grade for growth. And we're going to go take a look at the detailed estimates page here to take a look at what to expect in the near term. So as I mentioned, the company's already had impressive revenue growth, and we're calling for about 6% growth in 2026 or 2025, and then another 8% growth in 2026 to get all the way up to $3.8 billion after it doubled its revenue, as I mentioned, between 2018 and 2022. And then we're calling for 275% adjusted earnings growth in 2025 go from $1.83 all the way to $6.87 per share. And then on top of this massive boom, we're calling for another 21% growth in 2026, which is really impressive. And this is its earnings estimate revision recently. So this is that it's beat about 67% on average over the last 4 quarters. And we can see the revisions history here, but we'll actually go to a different part of the website to give you a little better snapshot of what's going on the earnings revisions trend. So we can see for the first, so this is Q4 right now, Q4 of 2025, and then this is Q1 of 2026. That estimate's up 17%, up about 2% for 2025 in general, and up 6% since over the last several months for 2026. And as I said, this helps it get that Zacks ranked number one strong buy and help restart that upward revisions trend that had started trending a little bit in the wrong direction for the stock in 2024, but now it's heading definitely straight up for the stock here, which is a great sign. We can see over here, it's trading about 9.5% below its average Zacks price target. And Wall Street's relatively high in the stock. Now has 7 brokerage recommendations, up from just 6 3 months ago. And about half are sitting at strong buys with no sells in there as well. And now we're going to head over to ZRS to see a little bit more about the performance of the stock and then some valuations and take a look at the technical levels as well. So we can see the stock's about 960% over the last 15 years. That easily outpaces the S&P 500. And then if we look at its econ sector here as well, so it's Zacks sector, the utility space is up just about 50% during this stretch, and its industry is up about 91%. So that gives us a sense of how much it's outperformed those groups. And then over the last 5 years, we can now just go more recently, the stock's up about 275%, which is a great sign. And then we'll go just year to date. So in 2025, the stock's about 51%, doubling its space. Then we're going to go take a look at the technical aspects as well, see if it might be ready to break out again to fresh highs on MYR Group. I don't know why the ticker has changed here, but here we can see it's currently trading right around the green line. Here is the 50-day moving average. It's found support here recently, and if we can see it possibly getting back to those early November highs and then breaking out maybe either in early 2026 or before Christmas in the next few weeks, it could easily break out. And if it does fall say back to that 200-day moving average, that would be a great long-term buying opportunity for investors that are high in the stock. And then we'll close out by looking at its valuation here as well. So we see that it's trading at around 26.7 times forward 12-month earnings, which is above its median over the last decade at about 19.3, but well below its highs of 31.6. So we can see that its valuation is nothing too stretched at the moment. It's trading well above its overall industry, but we know that the stock has crushed it over the space. So over various periods of time. So Wall Street is really willing to pay up for this company's outperformance. And as I said, it's not trading too far, or it's trading solidly below its own highs during the last 10 years, which is great considering the stock is trading right near its all-time highs as well. And we can see it's also trading somewhat in line with the S&P 500 despite crushing it for the last 15 years and the last 5 years. Investors should also be pleased that the company works under long-term agreements with utility companies, AI data center firms, and beyond, providing high visibility and larger margins. All in, the electrical construction company's growth is strong. Plus, it's set to ride the massive energy and grid infrastructure spending boom that's just kicking off to support the growth economy and the AI arms race. And that does it for me. And now I'm going to send it over to Dave Bartosiak.
All right, Ben, thanks for that. I've got my top stock pick of the week. It is LCI Industries, ticker LCII. Take a look here on Zacks.com. It is a Zacks rank #1 strong buy with a value style score of A, growth of D, momentum of B, to help it round out with a VGM composite score of B. It is in the automotive original equipment industry, which ranks in the top 32% of our Zacks industry rank. Now let's go ahead and take a look here. Why do I like it? Well, it's coming off a nice big surprise. In fact, it is in surprise trader. So almost 35% surprise to the upside. And looking this quarter, there's another huge earnings ESP heading into the print. So there's a decent chance that this one delivers yet again. Not incredible jump off the page numbers, but you do have growth here for the current year, 8.49% revenue growth. Next year, it's going to slow down just a smidge to 4.14. And if you look at the earnings side of things, 30% earnings growth this year. So this was just a great year overall. Next year, it's going to be 8.45. But I want you to look here on this magnitude on our Zacks consensus estimate. Current year number has gone from 645 all the way up to 728. Next year's number from 703 all the way up to 789. So a big jump there. And that's really one of the reasons why the stock rallied so much. Here, my price consensus and EPS surprise chart, which is my favorite chart on earth always to look at. You can see the left axis here is the EPS, the right axis is the price. And it had some struggles, 22, 23, 24, with these estimates, starting up really high and then they're just under delivering the whole time. That trend may have just changed this year. And here you see some really big earnings beats while these estimates are starting to tick on up. So this could be the turnaround that this stock is looking for. And maybe this is what gets it back up close to 160 where it traded in 2021. So that is my top stock pick of the week. LCI Industries, ticker LCII. Thank you so much for checking out this week's top stock pick video. Be sure to go on Zacks.com/promo for this week's awesome deal that we have going for you. For Ben and everybody else here at Zacks.com, I'm Dave Bartosiak, and we'll see you next week.